right into the presentation. A lot of you are trickling in now. Thanks everyone for joining, and let's get the up and running. Hey everybody, again, thanks for joining. We have an exciting webinar ahead of us. Today we're going to talk about the charitable mineral tax strategy. And we're going to go over who it's applicable for, how you can benefit from it, why it's a social impact, as well as how the social impact can give you a very large delta on your otherwise philanthropic desires. And when I say a delta on your tax benefits, rather than getting a little portion of what you contribute to charity as a tax benefit. Now we're able to get more tax benefit than the money that you contribute or that you put into this strategy. I'm going to share another screen really fast. And I see that we have a couple dozen people here ready. If anybody here would like to ask a question, we have a Q&A section. Let's see. It looks like there was audio. Can everybody hear me now? Let's have somebody respond and let's just put a little message in the chat. Are you able to hear me okay? Very good. It looks like you are. Wonderful. All right. I'll jump right into it then. And then as soon as I finish with this very short presentation, we'll go into Q&A. I'm not going to cover everything with this short presentation, which is why we have half of the meeting available for Q&A. And essentially today's presentation, we want to discuss how you can turbocharge a charitable contribution. My name is Jake Miller. I've helped coach, mentor, train, and instruct CPAs, financial advisors, and even some M&A attorneys from across the country. Currently on site in Guadalajara, Mexico, where we have one of our major projects that clients of ours with their tax savings have helped to fund and earn more on money they would have otherwise given the government. Anyway, jumping right into the mineral charitable tax strategy. It's a philanthropic partnership that aligns with tax incentives for charitable contributions. Let me explain how this works. Again, going back to the example that if I just give money to a church or the Goodwill store or whatever, let's say I give them $100 federally, I might save 37 later on in the future when I file my tax return and I list this as an offset or a deduction against taxes I owe. With this strategy, it's different. Essentially, we're going to work with an existing organization that has a number of operating entities, and we put $50,000 into one. That $50,000 then goes to work. Again, this is a business, and that money turns into a product. That product, typically based on a certified appraisal, has a 4 times multiple or 4 to 5 or 7 or whatever the number is. Inflation can do interesting things, but we have the expectation of around a 4 times multiple, meaning $50,000 into this operating entity helps us gather, collect, sift, refine volcanic ash. Eventually, volcanic ash, its finished retail product, is a 50-pound bag of soil conditioner. Now, we don't sell it. we check the box to donate, not at its retail value, but at its wholesale value, because you are working alongside several other people. And collectively together, you're going to have your 50-pound bags on a pallet or several pallets. All of these pallets fill up an entire barge or ship and get sent to Haiti. Prior to getting put on the barge, they have an appraiser, a certified appraiser who appraises specifically this stuff, show up and do an appraisal of everything altogether. And of course, the entity that you were operating with that, $50,000 now turned into $200,000 of a wholesale price of a product, you get your portion of that really big appraisal. And that's what you get. And a K1 is a tax offset at the end of the year with instructions for your CPA on how to file this on the tax returns. And if you have any questions, just reach out to us and our team and we can help guide you through that process. And something really important to recognize here, you're putting money into an entity. This entity then produces a product. It's the product itself, not the entity. You're not selling shares, you're not giving shares, but you've got an LLC that inside of the LLC now you have product. It's the product that you are donating. It is this asset that goes on a ship and goes to Haiti to help them because of the devastation from a dozen or so years ago, where there was this earthquake, a tsunami, they lost all their topsoil. Now, in an effort to help them become self-reliant, if in case there's another storm, whatever, and ships can't come in, you can't bring food to the island, that they can become self-sufficient, self-reliant. And in an effort to help them do that, well, we have to break up the clay and the rock that is what is left because the topsoil is gone and mix in the soil conditioner so that they can now grow their own fruits and vegetables and be self-sustaining. This is the philanthropic side of it. This is the social impact side of it. We are able to help a nation or a country that over the last dozen or so years, most people have forgotten about them, but they still have a need. We're able to help them fill that need and benefit from a tax standpoint or tax perspective for doing so. And again, a little bit more than just your typical 501c3 where you give money to and you're able to save, $37 off of the $100. Here, put in $100 times the 37 by 4. Let me just run that quick math for you right here. All right. I don't know if you can see this on my screen, but I take 37 by 4 and I have 148. Wait, I put in $100 and usually I get part of that as a benefit. Now, in this scenario, put in $100 and you get more tax benefit than it cost you. So there's an arbitrage or a delta, which is allowed. It's ethical, it's moral, and people do it all the time. And that's by not just being charitable and giving money, but by giving non-cash charitable contributions. And in this scenario, there's an operation where a lot of people are doing this all together and you're able to participate alongside all of them and work within, when I say work within the operations, you put the money into this LLC that has existing operations, it's been operating for more than a year, and this money then ends up with a final product that you're able to again vote to donate the assets or the raw product to this charity. And that's how you get, on the federal tax standpoint, $148 per $100 of donation in tax benefit. Now, for those of you in the state of California, add the state of income tax to this, and the math becomes a little bit easier. Again, 37 plus state of California highest income tax bracket around 13, 13.3, whatever. Maybe another 1.5 if you're in San Francisco, but keeping it easy, let's say it's 50%. Put in $100 into this, get a $200 tax benefit, and you end up with a 100% arbitrage or $100 off of the $100 in net benefit from tax savings. If this doesn't make sense to you, feel free to reach out to a member of my team or post some questions here in the Q&A or in the chat box, and we can help answer those for you. And again, I went over the arbitrage and how that works with you and how we can not only benefit the good people there in Haiti, but we can, in addition, help ourselves by helping them. Help ourselves because the government does allow people and these organizations to function like this so that those less remembered and more forgotten about individuals can receive this direly needed social impact. And again, that is why the government allows tax benefits and tax perks for people who are willing to help their own and other communities. through charitable giving and philanthropic giving. Sometimes, though, we just don't know what the most efficient and effective way is to give. Sometimes we think it's just give them some money. And though that is direly needed in a lot of scenarios, in this scenario, what they need is soil conditioner. And they need a lot of people to team together to do it. And that's what we've done. And because we've been organized and able to teamed up with many individuals, such as those of you who are watching now on this webinar, we are able to make a bigger difference by shipping not just a few bags, but boats and boats and boats of direly needed soil conditioner to the country of Haiti. Now, in the future, there will be other philanthropic efforts as well. In the past, we've done magnesium, which we participated with the Stroke Foundation in the United States, and we were able to get magnesium from the mountain, the raw good, the raw acid. Eventually, it turns into a supplement, which those individuals who have suffered a heart attack or a stroke, the Stroke Foundation provides them, those who are economically less fortunate, with these magnesium supplements, which help them avoid the next stroke. That lasted until the mountain ran out of magnesium. Now we're in volcanic ash. In the future, it could be medical kits for the people in Ukraine. A lot of different things we are reviewing and analyzing at this time. Today, the opportunity is volcanic ash in the country of Haiti, and that is what is providing us with the expectation of roughly a 4 times benefit. Over the last 5, 6, 7 years, that's traditionally what it has been. Look for it to be even more beneficial in future years with inflation and everything else that is happening in our economy. One of the really important things to realize is that individuals who've done something similar to this in the past, but not as a group, let's say they had a painting, all right? Maybe they purchased the painting for $100,000, or maybe it was inherited. Regardless, now the person that has the painting, the artist has died. Now the painting's worth a lot more because that happens a lot. And let's say it's worth $2 million. If this individual were to sell the painting, they would have to pay capital gains tax on the difference, what they paid for it versus what they sold it for. However, to benefit communities, there's this non-cash item, rather than selling it, having to decrease the value by paying taxes and then afterwards donating money. The government has incentivized people who have stuff to donate to do that by donating the stuff itself to the people who need that stuff. So who needs a painting, a museum, a cultural center, a city or a town, a hospital? A number of different entities might benefit from a very wealthy painting, typically a museum. That's probably like first choice. So instead of having to sell it, pay taxes, you are able to donate that painting to the museum and get the appraised by a certified appraiser fair market value as a tax deduction against ordinary income, subject to a 30% of AGI floor. What does all that mean? It means if you don't have enough income that this tax benefit offsets it, subject to annual limitations like the 30% AGI floor, it rolls forward up to 5 years. You get up to 5 years of tax benefits depending on your income and your income deduction needs, up to 30% of your adjusted gross income every year. So instead of paying taxes on it and then donating the money and getting a lesser benefit, you're able to get a bigger benefit by donating that picture. In this scenario, we're not donating a picture and we haven't held it for 20, 30 years and the artist didn't die. What we're donating is a commodity of sorts. And there's prices for these. And so instead of 100 times multiple or 2,000 times multiple or 4,000 times multiple, like a painting to a museum might be, it's typically 4 to 5 times, sometimes 7 times, just depending on what the item is. In regards to volcanic ash, historically it's been 4 times and probably will continue to be so, unless, of course, inflation causes everything the next year or two to go up. But on a bulk donation scale that you participate in one little piece of that bulk donation scale of everything that gets loaded on the boat, the appraiser is likely, we have no control over this, but historically, based on what they've done in the past, will come in around a 4 times multiple on the value of the money that you put into this entity that went through the process to refine and package and produce this finished good of a 50-pound bag, several of these bags on a pallet, and then several of these pallets put on a boat that then goes to Haiti. And your portion of it, 50,000, 200,000, $2 million, whatever you donate. Let me rephrase that. Whatever you put into the LLC that then goes through this process that then produces product, typically 4 to 5 times more than what you put in at the end of the day in regards to the wholesale pricing, which is based on the certified appraiser and his appraisal, which comes in right before it gets donated. And all of this comes to you in documents that you're able to utilize with instructions for your accountant so that you can know how to fill out the appropriate forms and receive this amazing offset against your ordinary income and this delta or arbitrage in regards to what you pay in taxes being more greatly offset because of this social impact donation that you're making with this non-cash charitable contribution. All right. And just a little summary of some of the things that I mentioned, some highlights. Again, minimum contribution to participate in this, again, for those individuals in the highest or close to the highest tax bracket is $50,000. And that's money that needs to go into the LLC. The LLC then needs to continue to process, refine, and create the finished product and good. And with all of that being said, there's a box that you have to check to donate the assets. And you get the offset against your AGI, the offset against your taxable income, limited only this year by 30% of your taxable income. Let's give an example. Let's say you have $1 million taxable income, also known as AGI, adjusted gross income. You have $1 million and you did a 50,000 charitable mineral contribution. Okay, what does that mean? So let's take that 50,000 and this supposed offset of 200,000 offset of a million, roughly 20%. Okay. The limit is 30%. So we have not exceeded our limit. We're doing good. That means our taxable income went from $1 million down to 800,000. And we have an arbitrage in tax savings. We paid out of our pocket. We we paid out, we have an outflow of 50,000, but we have a tax savings of a um, 70, what would that be? 74,000 roughly, right? So you've got an arbitrage of roughly 24,000 plus a social impact, and you've turbocharged your charitable tax savings. Let's change the calculation a little bit. Let's go from 50,000 to 100,000. So now we have a 400,000 offset. But again, on the same $1 million, we can't offset all 400,000 this year. We can offset up to 30% or up to 300,000, right? So again, we started out with $1 million that was taxable. We did $100,000 contribution, sorry, $100,000 contribution. And let's say that the appraisal comes in at a 4 times multiple, you get 400,000 as an offset. But you can only use 300,000 of it this year. The other 100,000 rolls over to next year. All right. And so you can see that you can reverse engineer to say, how do I get as close to my 30% as possible? In that scenario, it'd be closer to 75,000. 4 times 75, you've got 300. On $1 million, 30% of a million is 300,000. And you get really, really close to what should be your annual limitations of what your total gross benefit could be. Now, we do have people who intentionally over contribute because they want to do tax planning for 2 or 3 years. They want to make a bigger difference for the people in Haiti, and that's fine. That's good. That's understanding. We just like people to know and understand the proposed or the supposed math that should be an estimate that should get you very close to what the end result will be come time for the appraisal. Application deadline mid-December or when product runs out. And so again, magnesium, a couple years ago, it ran out early. And so a lot of people are planning to do like an end of year participation in the LLC that then could be, part of this product donation, this asset donation to the Stroke Foundation. Weren't able to do so because product ran out. Or applications, we stopped taking applications mid-December. And it's good to work with your advisors right now. It's good to analyze your current tax situation. If you're a high income W-2 income earner and you know what your bonuses are and everything else, and you can see and easily predict what your income is, this is something you can kind of do yourself with the information I've just provided you. If you're a business owner and there's a lot of complications, you have a lot of accounts receivable, it might be a little bit more complicated. You might need to be a little more conservative on your numbers just so that you're not over contributing and waiting for that delayed gratification till next year. Um, let's work with you and your team to find out what numbers make most sense. If you're in the highest income tax bracket or close to there, this strategy, amongst many other strategies, could help you save hundreds of thousands of dollars in taxes while while providing a fantastic turbocharged social impact for the good people in Haiti. All right. This is our information. Micah typically takes the applications over the phone. If you want more information, you reach out directly to me and I can help answer any and all of your questions. No question is a bad question. If you would like to watch the replay of this video, it will be available to all of those who registered. You will receive a link to watch it on YouTube afterwards. And so if you want to just, without reaching out, without bugging anybody, whatever, if you're more comfortable watching this again afterwards, feel free to do so. But don't hesitate to reach out to a member of the team if you have very specific questions about your specific tax situation, whether or not you qualify, if you're eligible for this, or if this makes sense. This is not something for everybody. Again, mostly for those individuals in the highest income tax bracket or they're close to are those who benefit great in a greater way and are able to participate with this type of money because they have this type of liquidity. All right. I'm going to give just a couple seconds for everybody to soak that in. I'm going to stop sharing my screen. I'm going to review some of the Q&A that I have here. All right. Appreciate it, James. I apologize that you weren't able to see the video in the beginning. We can send that out as well. Um, Looks like the chat is disabled. I apologize, but the Q&A feature is enabled. And we have a question. How do I know if this strategy will fit in my overall financial strategy? A couple qualifying factors. If you don't have the liquidity to throw $50,000 at something like um, this, this is not for you. At the end of the day, it makes more sense the higher income tax bracket you're in. If you're historically, or if you're doing this for the first time, making a lot of money, there is a high potential that this could work for you as long as you have the liquidity to participate. Um, how does this fit in with your overall financial or tax strategy? What we need to do, very likely, if you're doing a lot of other things that might also affect or decrease your adjusted gross income, which we help clients with a number of tax strategies. This is just one tool in the tool belt, so to speak. We should review the combination of this strategy alongside everything else you're looking to do. We actually have a team of individuals. We have Amanda, we have Johnny, we have Micah, myself, we have Danny, we have Claire. We have a lot of people that can take your phone call and review everything that you're doing with you so that you know how this does or does not fit amongst everything else that you're doing. A lot of people who are very proactive spend the last 3 months of the year doing tax planning. And sometimes they're moving money from column A to column B, all the way down to column Z to get a deferral, a deduction, or an exemption on taxes. That's very important to do before the end of the year. There's the old idiom, an ounce of prevention is worth a pound of cure. And literally these smaller, detailed steps that you can make now, come tax filing season 4 months after the end of the year or 8 months after the end of the year, looks so much better and is so much easier. So, so that you don't have to try to figure out that pound of cure later, let's be proactive. And my team is willing to help you do an analysis of all of your current and existing tax strategies that you're doing right now to see if this is better, more impactful, or if this doesn't fit, or if this fits alongside and can run together with what you're doing right now. So I appreciate those questions. Oh, buddy, it looks like I have more. Got to scroll down. All right, Adam. Would this be a charitable cash and non-cash donation? No, this is only a non-cash donation. You are putting money into an LLC, but you're not donating that money and you're not donating the LLC. The LLC has operations and those operations produce a product. At the end of the day, you donate the assets of the LLC and then eventually you let the LLC dissolve over time. And that is where you get this non-cash charitable contribution. And there are other types of donating that give you different benefits, different limitations, everything else. But this is what has made this strategy pretty rock solid. And we like to be on the conservative side of strategies that we implement and help our clients with, so that we feel confident that should there arise any questions in the future, they're really easy to answer for the IRS. Which to date, only three of our clients have had any questions about this strategy. Over hundreds of clients that we've helped them with, and those three clients, the issue was resolved within a matter of weeks with the IRS. Technically, they were being reviewed for other things, not this, but they asked about this because they were doing it in conjunction. It was a very large non-cash charitable contribution. They asked for more documentation on the appraisal. All of that was sent in, and issue was solved. So we like to have easy answers for our clients as well as for the IRS. What are the high-level steps to implement this strategy? Easy enough. It's an application. You fill out online, you wire some money. This money goes into an account that is associated with your LLC. The LLC deploys the cash and the money. The LLC has been in existence for over a year and participating alongside other operations for the same thing. Your participation allows you ownership of the LLC, which then allows you to vote and donate the assets that the LLC produces at the end of the day. And so, very important for you to all be aware and know about. And Adam is asking, so am I correct to enter 400,000 to the field of a Schedule A itemized deduction for a 100,000 investment? Roughly, yes. There's several additional forms that need to be included. The threshold used to be around $5,000 when you gave a non-cash contribution above a certain amount, which we are definitely exceeding that in a great way, that you have to fill out additional tax forms in line with your 1040, so that on your 1040 through your itemized deductions, you're able to get this overall tax benefit. But essentially, just super high level, Adam, you're along the right path. There's just some additional forms to fill out with all of that. And again, when you get this information at the end of the year, when I say at the end of the year, so like in February of the next year, when it comes time to report your taxes, everything else, there's a whole list of instructions, or if you need help or some assistance there, my team, we have an implementation team. We have this educational team, right? We talk about the strategies, the high level, this is how you do it. And then we also have an implementation team if you need some assistance there, if you or your accountant would like some help. Good info. It sounds like you did magnesium last year. Magnesium was actually 2 years ago. Was the multiple 4x? Has the multiple ever been below 4x? Following up, do you anticipate volcanic ash again in 2024? Great questions. I'm going to give the quick answer, then I'm going to give the more detailed answer. I personally did do magnesium a few years ago, as well as I've done volcanic ash. And it has historically been 4 times or near 4 times. Sometimes it's like 4.01, 4 point whatever. It depends on the appraisal and how things are allocated to everybody else. This year, it was presumed because of inflation to go up to 5, but we want to be conservative. And so we're still saying 4. We're saying 4 because there is no guarantee of what it will be. And we presume that it will be 4%. I think that inflation was going a direction and it kind of backed up a little bit. And so I don't think that, again, I can't speak for the certified appraiser, but I believe that will probably come in close to or near a 4 times multiple again. Do I feel like the volcanic ash will be around next year? Yes, unless it all sells out. And could it? We've had some very large corporate people participating, and there's always the concern that if everybody does everything that they say they're going to do, then we'll run out. However, I think the likelihood of us still having volcanic ash next year is very likely. Some people who feel like it might not be available next year are doubling down, and they're doing 2 years of contributions now, so they don't have to next year. Though I do want to give you peace of mind that if it's not volcanic ash, there will be something else. We have an entire arsenal of tax strategies, regardless of whether or not this charitable mineral tax strategy is around in 2024. There are other things that we can help you do. And that's why we're around. That's why we are presenting this webinar, letting you know about one of our many tax strategies that has been incredibly vital and instrumental in a lot of our tax planning efforts and implementations for our clients. Is it possible for a lower contribution, like 25,000? The black and white answer is you shouldn't do that, meaning they don't want you to. But technically, they do accept donations from individuals or companies. And so if you have a company and there are multiple people in this company, like a partnership, technically the limitation for the partnership is the same as it is for the individual, meaning If you found somebody else who wanted to do 25, you want to do 25, and you're both in a partnership, that partnership entity could do a total of 50. And then that entity would be what receives the K1. And then based on how you guys contributed or how you decided to split up the tax benefits, the people inside of that entity could have this pass-through benefit as well. And again, the technical answer that they want publicated, so to speak, is that no, 50,000 is the minimum, but being a person who always helps others find a solution. A potential solution is that you contribute through another entity where there are multiple participants and there is a total of 50,000 minimum. Adam, I appreciate you. And Winnie, so is it good for both corporate and personal tax savings? This typically goes on the individual tax return. It can, as I just mentioned, go on a corporate or partnership tax return and then flow on through to the shareholders or to the partners as corresponds to the type of entity that they might have. Now, corporations like C Corps have a different non-cash charitable contribution threshold than individuals do. So a lot of times it makes more sense for it to be individuals who are contributing or having it be a pass-through entity like a partnership rather than a corporation. Again, everybody's scenario, we can look at it on a one by one basis to know and understand what the most optimized or the most suitable participation amount and way can and should be while educating you. Again, we're here because we're educators. We help people know and understand complicated or what would otherwise be complicated and almost mystic strategies. We demystify these strategies. We try to spell it out as simple and as black and white as we possibly can so that you can more easily DIY, do it yourself, or understand and make an informed decision when you do get help to do this. Appreciate the question, Winnie. And then the need to have it in place before end of year for the 2023 tax liability. Yes, we are a little bit late in the season. A lot of people have already contributed. We are putting out this webinar to let more people know what they can do. But Micah, you have a great point. We are running out of time. We literally have just over 30 days left during the application period by which people can apply. And so if you would like to know more about how this might work for you, or if this works for you, or if you are eligible for this, you do need to make this a priority in your planning. I say that because we like people to have sufficient time to be educated and do proper planning, which means they're not in a rush. But I almost feel like we're in a little bit of a rush because time is going to run out. So over this next month, ask all the questions that you can. Reach out to everybody that you trust and know as an advisor or a consultant that may be able to give you a third party opinion on this, whatever. Reach out to us. Again, we are the people who have put hundreds of thousands of hours into this. We've helped people over the last 6, 7 years do this. We're able to help you do this. We're able to help answer a lot of the questions. We are a little bit of the source of information or correct information on what this is and how it can apply to you. And if you'd like more information about, how what this looks like in the IRC code or things of that nature, more than willing to sit down with you and your account and go over the details in specific. But we should schedule these appointments now. The closer we get to the end of the year, the busier we are and the harder it is to schedule with us. And so ask your questions whenever you have them. After this webinar, it is natural that hindsight, you think of all those things you should have asked. Feel free to reach out. I'm going to share the contact information one more time. And here we have that. Give us a phone call, shoot us an email, go to our website, take out your cell phone right now and scan this little QR code right there. If I take out my cell phone, what does this do when I scan it? I'm scanning it right now. And it says make a reservation or make an appointment, a hands-on. Let's see here. Well, if the QR code is not working, or if there's any technical issues, shoot us an email, let us know, as well as there's on our website a booking tab where you can click and you can schedule an appointment. There's a notes section of the appointment scheduler where you should put that I want to know more about the charitable minimum tax strategy, or if you have specific questions, you can also put that in the notes section so that we are prepared for your call when you do make an appointment. All right. Very good. We are running out of time. I'm going to give 10 more seconds if anybody has a question. If not, we're going to go ahead and wrap up the meeting. Again, if people want to reach out, the website is strategictaxsolutions.com. There's several different strategies there. One is called the Charitable Mineral Tax Strategy. Click on the booking tab to find out more and speak with one of our specialists, a member of our team that can help you run through your real life scenario of whether or not it makes sense for you and if or you qualify. And of course, if you just want a direct call to go over a few different options, what have you, or to speak with Micah on the implementation team so that she can fill out your application in 5 minutes and get everything processing for you so that you can benefit from this, so that you can have a turbocharged non-cash charitable contribution for 2023 and be able to participate alongside the rest of us with this amazing social impact program that we have in the country of Haiti. All right. My name is Jake Miller. Thanks again for having me. Thanks for attending and look forward to helping soon. Bye now, everyone.